Good evening, folks. This is Michael Huddleston with the Inner Circle Trader blog entry for February 2nd, 2011. Okay, we're going to go over a trade setup that you can use for intraday scalping, and it's a pretty consistent pattern. It takes advantage of the London close, and I hinted at this setup over a year ago in the first thread that I hosted for babypips.com, and I hinted at the fact that around 11 o'clock, 10 o'clock every day New York Standard Time, there's a likelihood that the market will slip back into its daily range. And we're going to go over that setup that took place today and the trade that I was able to capitalize on. But first, let's go over some of the parameters. Number one, you want to see a market that is either overbought because it's been trading above its average daily range of the last 5 days. I'll go over that at a different time because average daily range, I want to have a more thorough handling of it and explanation. But for right now, those that are familiar with average daily range, if you get the average of the last 5 days and we have an up day going into the London close, you take that average daily range in terms of pips and you add it to the low of the day, and it will give you a projected high for the average daily high or average daily range high for that day. And while that is an ideal condition, it's not necessary that you have that. If we have a market that is overbought and we have seen it trade to a key resistance level, okay, and also our Fibonacci and or pivot analysis has a confluence of support or resistance, suggesting that price should at least correct, if not altogether reverse. Okay, so we're going to use those guidelines for today. Now, the London close, since we all know that the Forex market is not an exchange or building, it's an electronic medium for traders like you and I to take advantage of price fluctuations and deal between an electronic medium such as this. So when we say exchange closes, or like London close, London open, New York close, Australian open, Singapore open, all these are approximations or times when traders in that region of the world would most likely participate in active trading. So for our sake, since I live in Eastern Standard Time, I'm going to have to, for the sake of explaining it and keeping things easy for me as the mentor here, you as the student unfortunately will have to do some research because I can't know or speak to everyone's geographical location based on time. So when I give you times based on this pattern, you just simply have to convert that to whatever that time would be at your time. Okay, so we want to focus on a window of opportunity around 10 o'clock in the morning Eastern Standard Time to 1 p.m. Eastern Standard Time. Anywhere in there, this trade can set up. Okay, now don't let that wide window of time scare you or turn you off, because it's very reliable and it's nothing that you have to be every second looking at. As you'll see in a moment, it's very easy because we're going to use our optimal trade entry to get us in the trade. So it allows you time to, number one, see where the entry price should take place and form, but the setup itself is very user friendly, and you don't have to be like a minute chart or a 5-minute chart hawk watching every tick so you don't miss it. So it will allow you to put a limit order in if you have a day job, or if you have a night job and you're trying to sleep in the daytime. If you have access to the market between 10, 11, and 12 o'clock in the afternoon New York Standard Time, this trade is very easy for you to catch. And like I said, it's very consistent. It happens a couple times a month. There's been weeks where it's happened 3 or 4 times in 1 week, but do not expect it to be every single day. Don't get lulled into believing that you're going to be able to catch this move all the time, because sometimes it doesn't come to fruition. Sometimes it'll fake you out and you'll just take a loss for that day. But as you'll see with this example and much of the other examples you'll learn as I continue on with this thread, it's very easy to define small risk and still capitalize on a good risk-reward ratio for your trades. Okay. Again, this is a scalping technique. This is not a swing trade, but it can be utilized in longer-term setups to get you in the move and really see it pan out into a wonderful position trade. But for the sake of explanation, just for today and for tonight's teaching segment, only consider this as a scalping technique. Okay. Alright, so we've already discussed that we want to look for a reason to expect the market to stop trading higher. For example, today we've been trading bullishly. Yesterday, in last night's video, I hinted at the fact that we had been trading in the sell zone on daily pivots. So let's pull those up and reference that again. Okay, so now we have R1 for today, R2 for today. This line in here is denoting a mid pivot MR2, which also overlaps with a institutional level we like to watch, which is at the 20 level, 162.20. Here is the central pivot. So we are again in the sell zone. Okay, so now we have price trading up into a mid pivot, and we are entering the time when London would be closing. Okay, so in this general area here, all through this right here. So I guess it'd be easier if I just drew a box, guys, in here. Okay, this is a rough approximation. Okay, in that area right here, time-wise, you would reasonably expect a London close to take effect. Okay, so let's take this out. Now, as price trades up to a level of resistance, or implied resistance, because a pivot is implied, it's not a hard level until we actually see price turn and reverse on it like we did here. Okay, price started to trade down. Okay, now here's what you're going to do. You simply look for the high, in this case here. So you drag your fib. Now initially you would expect to see this one here. So let's drop that here. Alright, see that low here? So as price started to trade down, okay, when it started to turn up in here, all you have to do is find where your optimal trade entry would be. Okay, well, we never traded up to that point. Okay, so price traded down lower. So as the price made that new low intraday, you drop it down to that low. Okay, so we have this low here from this high here. So this is a daily high trading down, so we want to look for a swing. Here is the 62% retracement and the 79% retracement. So here is our optimal trade entry. Nailed it perfectly. Okay, and also real quick, it's very important that the swing that you're measuring, for instance for the sell, from a high to an intraday low, the ideal trade conditions are anywhere between 15 and 20% of the daily range. Okay, so from the low here to the high here, it's like I think 2 pips away from being 100 pips for the day. So we'll just round it up to 100 pips. You want to see at least a swing down of 25 pips. Okay, and you can clearly see that we have that from the high here. So we'll say here the high of this candle, 162.30, And the low we're using for the reaction low intraday, we are looking at 161.74. So clearly we're over 25 pips, or 20% of this range would be 20 pips. 15% would be even less than that. So we definitely have a qualifying swing. Okay. So once we traded and in here and started to trade back up, we could have the fib pull down to here, and then finding where 62 and 79% retracement would be. Optimal trade entry is anywhere between 62 and 79%. You want to utilize a limit order, okay, in here, to go short on a limit. 162.10 was my entry. Where are we going to look to take profits? Okay, well, there's several ways to do that. You can take your pivot, and again, these are all configured for me to show swings. Okay, and here is our extension. Okay, so just use your 1.27, 1.618 extensions on your fibs, and you'll arrive at that low also. But the exit I took was at 161.50. I wanted to get out as price was moving in my favor. This area of congestion and highs was suspect to me. Plus, I also noted this low here may have had stops resting underneath it for those that have been long for the market. So that was today's trade. Okay, and let's look at another opportunity on trying to find targets for it. Okay, now we're going to take a fib from the previous day, and we're going to drop that in from the low to today's high. Okay, and this is a 38% retracement level in here. Okay, that is about, if it's line of long-term reversal or intermediate swing, that's going to trade lower for a period of days or so, you want to use the 38% retracement level as your time to take profits. Okay, so it's going to, when we retrace back to 38% retracement, that's a good idea to take profits there. Also, since this area here, let's throw our pivots back up again one more time, and you'll see that we do have a confluence of support. Next, let's just go with that one. We have a let's see, yeah, that there is a confluence of R1, central pivot, and midpoint in here. It would be MR1. So we have a confluence of support plus this low in here. We went down, blew out the stops, and we've traded up since then. So just to recap, we have an opportunity to find an intraday swing that is predetermined every single day, and it's based on the London close, and the premise is, as the market makes a high and trades up, this is the daily range up to this point. In this vicinity, in terms of time, price usually trades back down into the range. Now you can use the low to the high and find the 38% retracement, or, as I did today, the previous day's low to high, simply because we've been trading farther. Those techniques and how to blend them to find overlapping support and resistance to pick targets is going to be covered in greater detail. But for now, I'm just kind of giving you applications on how to use these things, because my concern is if I give you too much, you'll end up chasing all these things and be frustrated and not, gain anything from it. So I figured I'd use this one because I did get an email today. Aaron emailed me asking for some more tips on intraday and scalping, and this is one of the patterns that I have talked about vaguely in the past, but this is how it's done. And you look for the London close window. Like I said, it's anywhere between 10 o'clock in the morning Eastern Time, New York, to 1 p.m. in the afternoon, New York Standard Time. So in there, it'll always most likely unfold. You'll be surprised that it's very consistent. And obviously when you reverse this, and if the market's traded down and we've exceeded or traded to our average daily range of the last 5 days, or we are in a what we considered buy zone basis pivots and fib confluence, we can look for the optimal trade entry to make a low, rally up at least 15 to 20% of the daily range, and then as it trades back down to retest the low, it will give us our optimal trade entry, and we would be buying. We would use swing projection concepts, the fib projection extensions, all those things, and pivots, and obviously institutional level of 160-150 was my exit level, and today's low, not that it was the daily low, but the low for this move came in at 160-140, so I really only missed 10 pips, not factoring the spread, but not a bad little trade today. And again, hopefully you guys are beginning to see how really powerful the entry technique that I've shared so far. There are more techniques that you will learn, but this is the most visual. It's very easy to see. It's very time friendly. You don't need to be sitting in front of your computer every minute, every tick. Once you get your initial swing and it starts to rally up, you just measure your fibs from high to low, find out where your optimal trade entry between 62 and 79% retracement levels would be. Right in the middle, use that level, subtract the spread, and that would be your entry price. Now, once you go into the market, okay, I didn't talk much about order entry and order placement, how we do that, but just for a real quick completion's sake for this example, you would go in with a parent and contingent order, and you would sell on the limit here. And what that means is if once this is filled, your buy stop for protection, which would be minimum 10 pips above here, and your take profit limit order, wherever that would be active, and it becomes a OCO, order cancels order, at that point. Okay, so that was the trade for today, and that's how we look for a London close trade. Now, don't be discouraged. I know some of you may not have gotten all of this, even though that you can stop and rewind this video over and over again. I will have a full section on this in the scalping portion. I'm going to do a whole workup on scalping. I'm going to do a whole workup on swing trading and one on position trading. So those that are struggling with and waiting for me to do COT information and amplification of how you use that with open interest, that will be in that segment. But I've been reading Baby Pips, and well, let's take a look at them real quick. Okay, the last several posters for the blog, what every new in or aspiring forex trader still wants to know. It seems that a few of the followers have been struggling with market flow and intraday direction, and when it trumps market flow, or vice versa, when you don't use market flow and you use your higher time frame support and resistance levels. Another follower of Honor, he apparently, or she, I don't know if it's a guy or girl, I apologize. Apparently they're struggling with directional bias as well, and Mos Def, he or she, again, I don't know if it's a man or a woman, I apologize, basically is in agreement with the two previous posters, suggesting that intraday direction has been eluding their understanding. So let's take a look at the cable and look at a few insights. Okay, we are looking at a cable daily chart. Now, if you review the videos and commentary and analysis, all during this time frame in here, we were noting that open interest on the daily chart had fallen off precipitously, okay, while we were in this trading range environment, okay. Market moved higher rate as commercial traders lessened their short positions, which was illustrated in the form of open interest declining while in a big consolidation or a range, and that told you that we would expect higher prices. Okay, entered into another consolidation in here, which is a bull flag. I told you in previous videos that this high was likely to be tested. Market flow in here was bullish. It has not turned bearish, so all these bullish candles were, they should have been no surprise to anyone. I mean, we've been talking about this for the last few days, and even gave you suggestions as to where it may be heading. Let's pull a daily euro chart up real quick. Take these off here. If you're looking at this wondering if I use these moving averages, no, I don't. I just threw a euro chart up real quick, and for whatever reason this this platform throws that up as a default. So, but no, I don't use those moving averages. Looking at the euro, let's look at the daily high here, made on this candle. Okay, and pull it down to that low here. Looking at that scenario, we are now entering what would be considered optimal trade entry if one were to anticipate the market making a high in here and then trading back down. I believe that it is likely to create one in here, and we could easily trade down and test this low here, or more likely would be here. Notice how this high here, this high in here, this high, this high, we only really just tapped back against it here. We didn't trade above it and then retest, and I think that's probably in the euro dollar future, but we still can't dismiss the likelihood of price trading and retesting this level here should we continue through 79% retracement. If we get past that, we could have all expectations that we would see 142.75 area retested on the euro. Going back to the cable, okay, we have already exceeded the retracement level for this pair and just pierced the 79% retracement level in here, and now we're just testing right underneath it as well, again at the 162 figure. We did not fulfill a bull flag in here yet, but again, this is just my gut feeling. I believe we will retest this high in here. But should we trade back down and get below this low in here, obviously we would be looking for another move to swing lower. But it would be going against all of market flow, the trend, and just the whole larger picture. It just suggests that we will be retesting this high in here. Now, once we break through that, should we do it, this high back in here would be the next upside objective for our consideration. And notice that what used to look like a head and shoulders is no longer head and shoulders. We are looking to move higher in here. And going back to our daily cable chart, one of the keys to intraday analysis and direction, when we have these long, big, huge candles up or down, the intraday direction is obviously one-sided, it's slanted. Okay, so you want to be focusing on just the buys, and it's been like that for several days now. It gets tricky when you're in consolidations, yes, and I believe most of the newer traders that are following the blog and the thread, much like when they read other threads from other authors and books and such, they believe that the tools should work all the time at any time that they sit down at their computer, and it's not that simple. I mean, you simply have to allow the tools to get in line and get in sync, and then you as the trader react to what they're telling you. We're not like artists with paintbrushes. We just can't grab all these tools and sit down and use the chart as a canvas and say, okay, I have these tools that work X amount of times out of X amount of times, and simply because they do that in the past, I'm wanting it to work right now, and simply because I want it to work, it should. You're going to be very discouraged because it doesn't work that well. You have to have some flexibility, and you have to submit to time, and that means you have to allow the market to get in the right condition for what you're trying to trade. If you're looking for reversals, which is what I think most people are trying to do, I believe most people were trying to sell it in here. They were trying to sell it in here, and they probably were looking to sell in here. And now I did sell it today, but I told you why last night in the previous video, why I would have been looking for a sell. We were above the central pivot for several days, and there was other factors. We went to R2, R1, and we have traded to the 162 figure, and I mean, we're well over 300 pips for the week, and it's been all one-sided. So don't be looking for reversals, okay, when the momentum is such disproportionate to one side. In other words, if it's so slanted for the market to trade higher, if you're trying to look for reversal patterns and selling in those environments, you're absolutely stacking the odds against you. And I know psychologically, looking at the market, it looks like, okay, it's gone off for so long, it's obviously going to give me a sell signal. So let me look for divergences. Let me look for, head and shoulders. Let me look for, bearish candle patterns. You're going to look for every possible suggestive notion to get short in the market, because you simply don't want to accept that simply because we've been going higher, it can't go any higher. And the Forex market can go for a long period of time and be overbought and be overbought and be overbought and still keep on trading higher the whole time you're selling it. without going any farther with this rant, it's just important for one to understand the mechanics of how intraday activity and flows enter and move through the market. And if you look at a bar chart in here, you'll see that from the open to close, you'll see mostly open with higher closes, okay, all through here. So when you're seeing, the flow of the market on the longer term basis, this is a daily chart, guys. I mean, you really just want to simply be buying. I've had a number of individuals email me asking me, back in here, this is a good time to sell, the euro or the cable. And granted, we caught this one, but that was lucky. I mean, I had to tell you, that's luck. I just happened to be at the chart at that time to see when it would have reversed. I wouldn't have anticipated that had I been asleep. I just was in the chart real time, saw it, took the trade simply because the tools were telling me right then and there. Had I slept and woke up at 3 o'clock in the morning to trade the London session, I would have already missed it. So, but my point is I was basically telling everyone to basically look for buy signals in here, not to be looking for sell signals. And I'm not asking for anybody to come forward and post in the thread and say, yeah, I was one of them, but it's imperative that you understand that these tools work, but you're rushing to use them to fulfill your own will. In other words, you're looking at the market saying, okay, I believe it's going to go down because I think it's overbought here, or I think it's done moved too much and it's obviously got to come back by now. It doesn't have to come back. If we were selling down here, how long were we waiting for it to come back? I mean, good grief, we're almost 1,000 pips above this low in here. How far is it going to have to move and continue to move before you give up your notion that you have to be right? So it's just something to chew on, and I know we covered a lot of stuff, and it was a lot of a rant tonight, but there's going to be periods when you just aren't going to be on, and there's times when I'm like that. These tools, they work really, really well. Sometimes I just don't perform as well as I would have liked, and it's nothing that you need to blame on the tools or you as a trader. It's just sometimes you're just going to hit a rough patch and just accept that. You're not going to be on, which is the reason why I only trade a few times a week when something is really loaded up. Do I take losses sometimes? Sure I do. Like everyone else, I do. But don't be in here, and I think this is what's happening also. Everyone's looking to get in every single day, and you're just going to lose money doing that, guys. I mean, I can't tell you any clearer than that. You're going to lose money. Just wait for the patiently for the setups to come, and pick the style of trader you want to be. I mean, if you want to be an intraday trader, that's one thing, okay? But shorting in this condition in here, you really got to know what you're doing. And I highlighted tonight's example of how it can be done, but it doesn't mean every day look for a sell signal while we're in a commercial bull-driven swing, and this is what we have right here. So doesn't mean you can't be nimble and short sell, but it just takes a whole lot more knack. And if you're new, you don't have that knack yet. So be honest with yourself and take this as positive, constructive criticism. And wish you good luck, good trading, guys.